IMF Executive Board concludes 2025 article for consultation with the Dominican Republic. The International Monetary Fund, IMF, Executive Board wrapped up the article for consultation with the Dominican Republic on November 12, 2025. The authorities are taking their time to review the staff report prepared for this consultation. The Dominican Republic's economy faced a slowdown in late 2024 and the first half of 2025, primarily due to heightened uncertainty and tighter financial conditions. However, recent months have shown promising signs of economic revival, with credit, exports, and tourism growth all on the rise, supported by favorable monetary and fiscal policies. Inflation remains stable, projected to average 3.7% in 2025. The country's external balances are strong, with the current account deficit expected to narrow to 2.5% of GDP this year, primarily driven by robust exports and remittances, and fully financed by foreign direct investment, FDI. Economic growth is anticipated to accelerate to 4.5% in 2026, aligning with the long-term trend of 5%, while inflation is forecast to remain within the target range of 4% plus or minus 1 percentage point. The current account deficit is expected to stabilize around 2.5% and continue to be fully financed by FDI. The government's deficit and debt are projected to gradually decrease, partly due to reduced electricity sector losses and more efficient energy subsidy targeting. This will also create room for planned public investment increases. While the risks are skewed towards the negative side, the Dominican Republic is well prepared to navigate them. External risks from global financial conditions and heightened uncertainty persist, as does the country's vulnerability to natural disasters. However, the Dominican Republic boasts strong economic fundamentals and policy flexibility, enabling effective responses to potential risks. On the positive side, the country could benefit from trade diversion and increased FDI inflows due to changes in global trade policies. Domestically, delays in implementing the authorities' reform and public investment plans could pose a downside risk to growth, while robust implementation would create positive growth risks. Executive Board Assessment. The executive directors praised the Dominican Republic's sustained efforts to strengthen policies, institutions, and business-friendly reforms, which have contributed to its strong macroeconomic performance over the past 2 decades. They welcomed the expected growth acceleration and well-anchored inflation. While acknowledging the persistence of downside risks, the directors acknowledged the country's strong fundamentals and policy space, enabling effective shock absorption. Despite the strong fundamentals, the directors encouraged the authorities to persist with prudent policies and steadfast reform implementation to accelerate growth and enhance resilience. They emphasized the importance of maintaining prudent fiscal policies and supporting increased public investment, aligning with the medium-term fiscal framework and fiscal responsibility law. The directors welcomed the planned consolidation, focusing on revenue mobilization and improved spending efficiency, including the removal of generalized subsidies while safeguarding essential social spending. A well-communicated medium-term revenue strategy could lay the groundwork for broader fiscal reform. They noted that full implementation of the Electricity Pact is crucial for limiting fiscal risks and ensuring resilience. The directors agreed that the monetary policy stance is appropriate. They stressed the importance of strengthening the monetary transmission mechanism to enhance the effectiveness of the inflation targeting framework. As such, they encouraged efforts to advance a comprehensive and clearly communicated strategy for gradually phasing out exceptional liquidity measures. Further development of domestic financial markets would also support policy transmission. The directors highlighted the need for continued exchange rate flexibility, with interventions aimed at smoothing large shocks and rebuilding buffers to bolster external stability. The directors acknowledged the banking system's health and the limited systemic risks. They praised the progress in enhancing the financial sector supervisory and regulatory framework. The adoption of Basel II and III standards, the development of a macroprudential policy toolkit, and the strengthening of the AML/CFT framework remain key priorities. The directors welcomed the ambitious structural reform agenda aimed at boosting the country's potential growth and achieving high-income status, as envisioned in the Meta2036 Plan. They emphasized that efforts to improve governance, advance labor and social security reforms, and efficiently invest in infrastructure, education, and health are essential for achieving these goals. Recognizing the progress made, the directors agreed that the Dominican Republic's high vulnerability to natural disasters necessitates a comprehensive approach to mitigating risks and building resilience. Important measures include enhancing disaster risk management frameworks and integrating natural disaster considerations into fiscal policy. Dominican Republic, selected economic indicators. Population, millions, 2024 10.8. GDP per capita, 2024, US dollars 11,542. Quota, 477.4 million special drawing rights, SDRs, equivalent to 0.1% of the total quota. Poverty, 2023, share of population 23%. Main exports, tourism, gold, tobacco. Extreme poverty, 2023, share of population 3.2%. Key export markets, US, Switzerland, Haiti. Adult literacy rate, 2021, 95.5%. Projections. 2020 to 2026, output and price indicators. Real GDP, annual percentage change, unless otherwise stated. Nominal GDP, RD dollar billion and US dollars billion. Output gap in percent of potential output. Consumer price inflation, end of period. Exchange rate, peso to US dollar period average and end of period. Real effective exchange rate, end of period depreciation. 2020 to 2026, government finances. Consolidated public sector debt. Consolidated public sector overall and primary balances. Non-financial public sector, NFPS, balance. Central government balance. Revenues and grants. Primary spending. Interest expenditure. Rest of NFPS. 2020 to 2026, financial sector. Broad money, M3. Credit to the private sector. Net domestic assets of the banking system. Policy interest rate. Average bank deposit and lending rates, 1 year, in percent. 2020 to 2026, balance of payments. Current account. Goods, net. Services, net. Income, net. Capital account. Financial account, excluding reserves. Foreign direct investment, net. Portfolio investment, net. Financial derivatives, net. Other investment, net. Change in reserves, increase. Gross international reserves, GIR, in millions of US dollars. Total external debt, in percent of GDP. Sources. National authorities. World Bank. IMF staff calculations. Note, the latest available data is indicated with 1/ and 2/ in the tables.